Now for the latest in Nigeria's primary equity and debt market, Egie Akpata, head of capital markets at UBA Capital, joins me to review the ongoing and future activities in that space. Thank you so much, Egie, for joining us. Egie, I think I want to start with the developments around the Naira. We know that the FX reserves have dropped below $40 billion, and I imagine a lot of foreign investors may begin to get jittery, but is there any evidence of that impact in the debt markets today?
Well, I think if you just look at where yields are now relative to about a month ago, there has been an uptick in yields by almost 1%. Most federal government bond issues are trading close to 14% yield. There's one that's even above that. And that's obviously because of selling pressure for people trying to take money out of the country and also reduced buying activity from foreign investors. What will be interesting is when the central bank tells us exactly how much they believe is in this system from portfolio investors. That number is most likely to have dropped.
That is a key number. I'm sure a lot of people will be paying very close attention to, especially when they compared the figure to the FX reserve. But let's move on to the state government bonds and the activities that we can anticipate in that space this year. I'm hearing that we could have as much as 10 issues in this market this year. Your take about the appetite for those issues and the capacity of the market to absorb them?
Yes, in terms of the state government bond issues, that's a very local market, no foreign investment money in there. The money predominantly coming from pension funds and banks. I think there are quite a number of state government bonds in the process, but that's always the case. The question is how many of them manage to close this year.
Yeah.
We know quite a number of them take more than a year to do, so you might have some that start this year that close next year, and some that are this year started last year. But we'll almost certainly have more than 5 issues closed this year, which was how many closed last year and the year before. What will be very different is in terms of the size. You know, once you take out the big oil producing states and Lagos from the equation, you can be sure that the average bond size that will be issued this year will be a lot less than in the past.
Right.
But in terms of number of issuers, there will be more issuers this year than last year.
Right, but you just mentioned that the yields are closer to 14% for the federal government issues. Do you think that the spread between the federal government yields and the issue yields for these state government bonds is likely to close, given the fact that at some point state governments would say, listen, we really cannot issue beyond a certain price?
Well, I mean, the spread between federal government and state government bond has been narrowing over time as investors have gotten more comfortable with the asset class.
Right.
What we do know is that in the past 7-8 years, the highest coupon has been 15.5%. And really no state government has gone above that in the past 7-8 years. They might have to go above that if they must do an issue and the federal government rates are very high, but even where federal government bonds are now, it's not likely that you'll see state government bonds issued at above 15.5%.
Right. Let's shift our focus now to the IPO market for equities. A lot of people still, fingers crossed, we believe we may see an IPO this year, but clearly the market has started very poorly. And what impact do you think that could have for any issues that are in the pipeline right now?
Well, I mean, in terms of new issues, I mean, obviously the problem is in terms of the price earnings ratios you're seeing across different sectors. It's extremely high for the foreign multinationals that sell consumer products, but it's quite low for the banks. People with low valuations measured by price earnings ratio are not normally in a big hurry to issue. But I think one thing that has improved the capacity of that market to come back has been the performance of some of the rights issues over the past 1 year.
Right.
A number of people who took up their rights in a few issues last year have made significant gains because they made that investment in the rights issue. And that might encourage some other investors to take opportunities when some new quality companies come to the market. Right. But clearly the valuations you have now might not work for some sectors. There are some companies who have to raise equity. I mean, there are a couple of banks that must raise equity, and the question becomes how they do it. Whether it's the right issue, a public offer, special placement. But they will have to raise equity.